Hey guys, B Twice here. Today is Thursday, July 29th. We're going to be taking a look at SPY, QQQ, IWM, CHWY, Etsy, and AMD. Um, so we're going to go ahead and kick this off. We're going to look at SPY. We're actually going to look at the bear and the bull count on this one today because right now both are in play and both could be valid. And with after hours starting to really sell off, or it did sell off, especially with Amazon completely dumping after earnings. This thing could really go either direction. So we're going to talk about both of them. So, if you remember from my previous videos yesterday and the last few days, is that what we saw is we had a 5-wave rally up to what was all-time highs for a wave one. Then when we were pulling back, we pulled back for what potentially could have been a 2, and we saw an ABC move. We had an A, we had a B, and we had a C. And I tweeted about this the other day that we saw a clear 3 waves to the downside, but the NASDAQ wasn't showing a clear 3 waves, so I was favoring more downside from there. Ultimately, what ended up happening was we had the A, we had the B, we had the C, and then we went up to all-time highs. So as we rallied up to all-time highs, I said, you know what? It does appear that this 2 bottom was set right here. And then we went up to all-time highs. So what the bulls are saying is that, hey, we've already came down, we've bottomed for 2, meaning we're not going to cross this 100% red line again. This is invalidation for this setup. So this red 100% that you see here, this 435.89, that's invalidation. The bulls are saying we're not going to go back beneath there. What they're saying is that, hey, we've kind of had like a leading diag a little bit here, but we've had a 5-wave impulse up for a 1, and now we're in the process of an A, B, C move to the downside for a 2, and then we're going to rally hard from there. So if you look at these candlesticks from at the aftermarket hours where we dumped, you can clearly see that we dumped down here and then we rallied hard up in the next hour, and then ultimately we went lower. And this is why looking at aftermarket or pre-market hours makes a lot of sense and is very important. Every tick does matter, and you can clearly see that we've had an A, we've had a B, and we're coming down for a C. At least in my opinion, that's what I'm seeing. So I do favor the bull count here, and what I do think is going to happen is I think we're going to get one more flush tomorrow, and it might be deep. It might take us all the way down to right around that invalidation point. That dip, in my opinion, is going to be a buy. I'm going to be buying that dip because ultimately I do think that we're going to be ripping back towards all-time highs. I think that we're going to see SPY hit 450 here sometime, probably in August. So I will be looking for this flush, but be mindful. A lot of times it's good to wait till 11:30, 12 o'clock. Let the initial price action take place. That way, if it does continue to flush, or if you do break this invalidation here, then you know what your next price target is going to be. So that's the bull count. So the bulls are saying, hey, we're going for an ABC correction down to the downside, but it's just going to be somewhere. It could be, 437, or it could be as low as 436, 435.89, something in that ballpark. But they're saying we're not going to break invalidation. We're going to hold this and we're going to rally to all-time highs. So let's see what the bears are seeing. So what the bears are seeing is that we're actually having some kind of flat here. So even though we did go to all-time highs, the bottom for 2 is not in, meaning we're going to pass this invalidation point. It's not letting me move this stuff, so I apologize for this real quickly as I move some stuff out the way. But what the bears are saying is that basically we had a 3-wave move to the downside and that this is a bear count A. Then we had an A, B, and this whole sequence up here is a C to take us up for a B. And then ultimately we're going to flush down, and this flush is going to be another correction. It's going to be another, it could be a complex correction even, but it's going to take us somewhere in the ballpark of 435 to 433. So when you have a flat, it is valid for your correction for you to break the last high. And basically what you have, as long as it doesn't go over the 123.6, you can be in some kind of expanded flat or running flat. And that is possible for this to be the case of what we're seeing here. So the bears are saying we're in some kind of flat. Even though we've popped above all-time highs, we haven't passed the 123.6, so this is our B up here, and ultimately we're going to flush lower for our C. And if it is some kind of flat, it's going to take us somewhere between the 123.6 and the 161.8 extension of the move of A off of B, and where that puts us is 435 and 433. So I talked before about how I favor this to be a bull count, and I think that we're heading down for 2. I really don't see this as a flat. I think this was a wave 1 up here. So the original count that we just went over, I see this as a 1, and that we're heading down to this ballpark over here for C. So I see us coming down here and then popping to the upside, following the green line. The bears are saying, no, you're going to follow this red line. So now with all this being said, I think this dip is a buy, whether you're a bear or bull, because even if you get in right here, and you get in at 436, there's not that big of a difference between getting at 436 and getting at 435 if it was to come just down here and then rally up. Plus, this market really likes shallow retracements. We've seen it time and time again. All these dips continue to get bought up. So it's not a bad idea to buy the dip until we're proven wrong that it's that buying the dip is going to fail us. So we'll favor the bull count on this one, but either one is in play and the dips are a buy. Okay, so we're going to take a look at QQQ. And QQQ is kind of the similar situation, but here I do favor the bear count. So it's basically the reason I favor the bear count has to do with this initial price action, and I've gone over it in my video yesterday, is that when you actually look at this, the bulls are thinking, hey, this is an A, that's a very shallow A, but that this is an A, and I'm sure, yeah, if you go into like the 5-minute chart, you can see a 5-wave impulse here and then a pop to the upside. So they're saying this is an A, this is a B, and then it's a very, very deep C. And that this was our wave 2 bottom, and that we're in a leading diag here. So this would be a leading diag, a 5-wave move to the upside, and that right here we have a bull 1. So ignore the ABC. There's no A, there's no B, there's no C. It'd be a leading diag with a 1, 2, 3, 4, 5. This is a 1, and we're coming down for 2. So now the one thing that you do see similar to SPY is that candlestick. So you do see an A and a B. So you do see that, or it could be a 1 and a 2, followed by a big flush for 3 at open tomorrow, then a 4, 5. And then basically you'd have a zigzag. You'd have a 5 waves down, you'd pop to the upside, then you have another 5 waves down. So with that being said, what the bulls are seeing is an A, a B, and that we're coming down for C now. And what they see is that obviously we've already passed the 61.8, but we cannot pass the 360. So the bulls are saying is that we're going to catch support somewhere between 360 and 363, even though we've already kind of passed beneath it. But we're going to find some support somewhere in here, and we're going to follow this green line out of here. Now, the bears are saying no, we're not gonna catch that support. We're likely in a 5-wave move to the downside. It's going to be a zigzag. It's going to be 5, 3, 5, and it's going to take us somewhere between 358 to 353. Now, the reason I favor the bear count here and I don't on SPY, I do think it's going to end up being shallow. I think it's going to be somewhere right around the 358 range, maybe a little bit deeper than that. But the reason I favor this is because what I'm seeing with this move here is I'm only seeing this as an A. I'm seeing this as an A, and I'm seeing an A, a B, and then this as a C, just like I have drawn. I've got an A, I've got a B, and I've got a C. So what I'm saying for that is that I've got a bear A here, and I forgot to put the bear B, so I'm going to quickly duplicate this thing if it'll let me. All right. So I apologize about that. But yeah, so basically I'm saying that, hey, we've popped down for an A. We've had an A, B, a C for our bear B. And now we're going to see a zigzag to the downside. And where it's going to take us is to this bear C price target. And it's going to be somewhere in here. Now, with that being said, I still do think dips are a buy on QQQ. But I would like to see it go a little bit lower than where I'm buying the dip on SPY, just because I think it is going to head lower than that. Right now, it's trading at 362.70. So there's a really good shot that we will get somewhere in this range versus ending somewhere around 360, depending on the price action we see tomorrow. So I still do think dips are a buy. Just make sure you're giving yourself time on the contracts. All right, so IWM. So IWM is starting to show up as a little bit of a shining star. It's showing strength. It showed strength today, and then an aftermarket where QQQ and SPY were dumping, it actually held some strength and went up a little bit at first. So what are we seeing? So what we're seeing is that we popped up for a 1 and that we've pulled back and we've bottomed for our 2. We had a complex correction and we bottomed for our 2. Ultimately, now we've had a 5-wave impulse to the upside and we're in our corrective sequence down for a 2. So I've been tweeting about dips on IWM are a buy and that we're going to be looking for somewhere into the 235 price range here in these upcoming weeks. I still believe that we're likely going to get a flush on IWM tomorrow, just like we are on NASDAQ and SPY. They're going to be pulling it down, but they're pulling it down for a clear wave 2. We may pop a little bit to the upside before we go lower, but I really like anywhere beneath 220 as a great buy spot. If you can get in at 218, that's golden. But then from there, we're going to be looking at a price target somewhere up at 235, and hopefully we'll see that in a couple weeks. So I think IWM right now is probably the best dip buy of the indices. Okay, so let's take a look at AMD real fast, if it will let me type. Okay, so anybody who was in AMD with me since I was screaming it was a buy, honestly, for weeks, I sounded like a broken record. Well, congratulations, because obviously we got paid off in a big way. So where is this thing going now that it's rallied and it's selling off after hours? Um, so basically what we saw is we had a 5-wave impulse up for a 1, we pulled back for a 2, and then we had another 1-2. So we have a 1-2 nest. We have a 1-2, 1-2, then we popped up for a 1-2, and this is where you start to see that 1-2 nest, because obviously when you have to start looking at every impulse, and we're on the hourly. So when that happens, we're in a wave 3 of a wave 3 of a wave 3, um, which is extremely powerful. So with that being said, we saw this massive rip to the upside. Right now, I'm seeing this as being our white wave 3, and that we pulled back for this white Roman numeral wave 4. So I do still think we're going to catch support somewhere down here, and then ultimately we're going to be rallying higher, and then that's going to be our blue wave 3 top. We'll pull back from there somewhere in the ballpark. So maybe we go up and we hit, 107. From there, we pull back and we'll find bottom somewhere between 101 to 106, somewhere in this range. And then ultimately, I do think we're going to be going up to 110. So I do still think AMD um, is going to get to the 110 range before we have a really, really significant pullback. But that's really going to be dependent on the market. If we see a very serious flush across the indices tomorrow, it could bring this thing down, and it may be that this 3 is actually here and that we're going to be pulling back for our red 4 somewhere down here already. And then obviously I'd have to go back and redo my count. I don't see that right now. I'm still holding, but I have secured a lot of profits, and I will be looking at any major flush on AMD as a great dip buy spot. There's been millions, millions, tens of millions of dollars placed on AMD calls ranging from the middle of August through September. And with that being said, when you're seeing that kind of big money get placed on a stock, you have to expect that it should continue to rally. All right, so now let's take a look at Chewy. So Chewy is one that I've also been ranting about, saying, hey, this is a great dip buy, and it looks like Amazon is really pushing this to go down to what I originally saw. So I did a video on Chewy yesterday, and this is the drawing that I had on it. I didn't change anything, and basically what I said was that, hey, as long as we don't cross above the top of here, unless we're in a flat, which I just don't see, as long as we don't cross the top of there, then we're still in our correction. We pulled down for an A, we popped up for a B, we didn't cross above the high that we set at 1, and ultimately we're heading lower for 2. So all dips on Chewy are a buy. I think it's going to get severely beat down due to what just happened with Amazon's earnings. Etsy's going to be the same thing, and that's what we're going to look at next. I think that anywhere you can get into Chewy between 81 and 77 is a great dip buy. That's going to be our wave 2 bottom. Depending on how bad Amazon gets abused, there's a shot that it could go all the way down to the 77. But if we're lucky enough to see this 1 pull back for a 2 and go all the way to 77 when it can't pass 75, that's going to be a great dip buy spot. So I'll be watching this. I got into a starter position back here where I have my A. Ultimately, I'm going to be looking to double down once we cross the 100% mark. So once we get into my circle. So hopefully this one will pay out for us. But I do really like Chewy as a long-term position and a short-term pop position once we get down to this 81 range. Etsy. So Etsy, very similar story. It's going to get extremely beat up due to Amazon. And basically what I'm seeing is that we've popped up for a 1 and we're coming down looking for our wave 2 bottom. So what I'm seeing is that this entire impulse down, it ends up, originally I thought we had maybe an A, a B, and then a C. Upon looking at it more, I think I'm seeing a 5-wave move. So I've labeled this an A. Then I see a 3-wave move up for a B, and now it looks like another 5-wave move down. So this is a very common zigzag. A 5, a 3, and a 5. It's going to take us somewhere in this ballpark. Technically, a lot of times you'll look at the 100% to the 161.8% extension off that. The reason I'm not is because that would actually pass my invalidation for this being a wave 2. So I don't think it's going to pass this 180 range. If I can double down on my position at 181, that will be a gift. I don't think it's going to go that low. I think maybe 185 might end up being the bottom somewhere in there. It's really just going to depend on how big of a flush we end up getting tomorrow. But it's already trading at 192.75. So even, pretty early in the morning, it would be a great dip buy. Okay, so that was all I had for tonight, guys. I'm going to go look at a few other charts, and if I have some time, I'll get some more up. But either way, if you like these videos, go ahead and hit a like and subscribe.